Hey everyone, welcome back. It's time for another deep dive. You know how everyone's talking about the 2024 election and what it might mean for the market? Well, we're going to tackle that head on today.
Before going to the full video, need to manage multiple accounts safely and securely?
GoLogin, the best browser for managing multiple accounts.
With GoLogin, you can create multiple browser profiles, stay anonymous, and avoid bans. Perfect for marketers, freelancers, or anyone looking to stay under the radar online. Click the link below and take control of your online presence with GoLogin today. Okay, back to the video.
But get this, sometimes it's our own brains that trip us up when it comes to investing.
Oh, absolutely. It's fascinating how elections can really amplify our natural biases. Like, you've heard of confirmation bias, right?
Yeah, where you kind of gravitate towards news that already fits your worldview.
Exactly. You only see what you want to see. It's like if you're convinced your favorite sports team is going to win, even though their track record's been kind of shaky lately.
Uh-huh. You're only focusing on those awesome plays. Right.
Right. And that can be dangerous with investments. You might hold on to a stock just because it aligns with your political views. But you could be ignoring some serious red flags.
Ouch. So how do we avoid falling into that trap? What other biases should we watch out for during these election years?
Well, there's recency bias. That's when we get fixated on what just happened. Like, say the market dips right before the election. People freak out and start selling, thinking it's a sign of worse things to come.
Even though historically the market usually bounces back after elections.
Precisely. And then there's the whole herd mentality thing. Everyone's doing it, so I should too.
Yeah, suddenly everyone's piling into this one hot stock and you don't want to miss out.
Fear and greed. Those emotions can really drive market volatility.
So we need to stay calm and rational. But how? Easier said than done right. Especially with all the noise and uncertainty surrounding an election. That's why we're diving into this report from InvestNet today, Navigating 2024 Election Year Market Volatility. It's going to be our roadmap for this deep dive.
It's a great resource. So let's start with some historical perspective. This might surprise you. Since 1961, the S&P 500, that benchmark for the stock market, it's only had negative returns during 2 presidencies.
Wait, really? Who were those?
Nixon and George W. Bush.
Huh. So basically, no matter who was in office, the market generally went up over time. That's kind of reassuring, actually.
It is. There's always going to be some volatility, of course, especially leading up to an election. But history shows us that things tend to stabilize once the results are in.
So maybe we shouldn't buy into all the doom and gloom predictions. But here's where it gets really interesting. InvestNet found that since 1952, Democratic presidents winning re-election have historically led to the biggest post-election gains in the S&P 500. Why do you think that is?
It's an interesting trend. One theory is that when a sitting president from either party wins a second term, it signals stability and predictability. And that tends to be good for business and investor confidence.
Makes sense. So, okay, we've got some historical context. Now let's get into the nitty-gritty. What are some specific issues investors should be watching as this election heats up?
Well, taxes are always a hot topic. The 2017 Tax Cuts and Jobs Act is set to expire at the end of 2025. And depending on who wins, we could see that extended, modified, or even reversed.
Right, so the tax landscape could look very different for both corporations and individuals. How might that impact the market?
Lower corporate taxes could potentially boost stock prices since companies would have more profits, but higher taxes could have the opposite effect.
Okay, taxes got it. What else is on investments' radar?
Trade and foreign policy, these are crucial areas. We've seen this shift towards protectionist policies lately. Tariffs on imports and a focus on domestic production.
Yeah, those tariffs were a big deal during the previous administration. But the report suggests that both parties might actually be on a similar page when it comes to trade.
That's right. Both Democrats and Republicans are talking about protecting American jobs and industries. So regardless of who wins, we might see more protectionist policies.
Interesting. So that could mean continued tariffs or even new trade barriers. What kind of impact could that have?
It could significantly impact certain sectors like manufacturing and technology. Those are definitely areas to watch.
Got it. So we've got taxes, trade, and what about the regulatory environment? How might that shift depending on who wins?
Historically, Democrats tend to favor tighter regulations. Especially in industries like big tech agriculture and pharmaceuticals, Republicans typically prefer a lighter touch.
So a change in administration could really shake things up for businesses.
Absolutely. This is another area where investors need to pay close attention to potential policy changes.
Okay, taxes, trade regulation,
Yeah.
all potentially on the table. But InvestNet also mentions immigration. How does that fit into all of this?
You might not think of immigration as a major market factor, but it can actually have a pretty big impact. The recent surge in immigration has been linked to some positive economic trends.
Like what?
Well, some research suggests that increased immigration has contributed to GDP growth. It's also been linked to more stable housing prices and even lower inflation.
Wow, so more people coming into the country could actually be good for the economy.
That's what some studies indicate, but of course some candidates are proposing significant changes to border policy that could potentially slow down immigration.
And if that happens, we might see a reversal of those positive economic trends.
It's a possibility, and something investors need to consider.
All right, so we've got taxes, trade regulation, and immigration, all potentially in play. Before we wrap up part one of this deep dive, any final thoughts on these topics?
I think the key takeaway here is that the market often reacts more to uncertainty than to the actual policies themselves.
That's a really important point. It's not just about what happens, but how people perceive what might happen.
Exactly. So staying informed and understanding the nuances of these issues is crucial.
Great advice. We'll be back in part two to cover even more ground, so stay tuned.
And, we can't forget about those big entitlement programs, Social Security and Medicare. Always a hot topic during election years.
Oh, for sure. You always hear the candidates talk about protecting these programs or making sure they stay solvent. But honestly, it's rarely clear what that actually means.
Yeah.
Like what policies are they actually proposing?
Exactly. It often feels like both sides kind of dance around the issue. The reality is neither party has really put forward a solid, comprehensive plan to deal with those long-term financial challenges facing Social Security and Medicare.
So basically, no matter who wins, we're probably going to see a lot of uncertainty around these programs. And that could make investors nervous, right? Especially since these programs impact so many people.
Absolutely.
What?
Any sense that those programs might be in trouble could definitely spook the markets. It's something to keep an eye on as we get closer to November.
Okay, so we've covered a lot of ground here. Taxes, trade regulation, immigration, the future of Social Security and Medicare, all pretty heavy stuff with the potential to really shake things up in the market.
Yeah.
So given all this, what's your advice for navigating all this election year volatility?
Well, Envestnet lays out some really solid guidance in their report, and I think it boils down to three main things. Educate yourself, stay focused on the long term, and keep those lines of communication open.
Okay, let's break those down. What does it really mean to educate yourself in this context?
It means going beyond just the headlines and sound bites. You got to dig deeper into how different election outcomes might actually impact the market. Look for unbiased analysis from sources you trust.
So not just relying on social media or partisan news outlets.
Right, exactly. Talk to financial advisors. Read reports from reputable organizations like Envestnet. Really try to understand the nuances of these issues.
Solid advice. And what about staying focused on the long term? How do we avoid getting caught up in all the short-term craziness of the election?
It's important to remember that investing is a marathon, not a sprint. Your financial goals should stay consistent regardless of who's in the White House.
Don't let those short-term market swings, especially those driven by election jitters, throw you off your long-term plan.
Exactly. Stick to your strategy. Resist those knee-jerk reactions driven by fear or greed. And remember, historically, markets tend to recover from those election-related dips.
Yeah, but that's easier said than done sometimes.
It can be. That's why that third piece of advice, keeping those lines of communication open, is so important.
Okay, so who are we talking to here?
Your financial advisor. They can be a huge help in navigating these uncertain times. They can address your specific concerns and help you make adjustments to your portfolio if needed.
Don't be afraid to ask questions. Voice your
Exactly.
anxieties, get that guidance.
You're not in this alone.
Got it. So as we head into the final stretch of this election season, stay informed, stay calm, and stay focused on your long-term investment strategy. Don't let the political winds blow you off course.
Well said. And here's a final thought for you. Given everything we've talked about, the historical trends, those potential market impacts, the importance of managing our own biases, what adjustments, if any, might you want to make to your own investment approach?
That's a good one. Definitely something to think about as we head into these last few weeks before the election.
For sure. And as always, we encourage you to check out the full Envestnet article for more in-depth analysis.
Great reminder. You can find a link to that in our show notes. All right, so we've talked about those biases that can trip us up, and we've dug into some of the big economic and political issues that could really impact the markets. But what about our own personal finances? What can we actually do to navigate all this volatility?
That's the key question, right? And that's where understanding those biases we talked about earlier becomes really important, like confirmation bias. Remember that one?
Well, yeah, that tendency to look for information that just reinforces what we already believe.
Yeah.
How does that play into our personal finances?
Well, let's say you're convinced that a certain candidate's policies are going to tank the market. You might be tempted to make some big changes to your portfolio based on that belief alone, even if a broader analysis of the situation suggests otherwise.
So we could end up making impulsive decisions that really aren't in our best interest long term. What's the antidote to that?
Objectivity. Take a step back, take a deep breath, and really try to look at the information from all sides. Don't let your political leanings dictate your investment strategy.
Makes sense. What about recency bias? That one where we put too much emphasis on recent events. How does that factor in?
Imagine you're watching the news, and there's a report about the market dipping right before the election. Recency bias might lead you to think that dip is the beginning of a long downward spiral.
So you panic and sell all your investments.
Right, even though historically markets have often rebounded after elections. So remember, zoom out, look at the big picture, don't get too fixated on those short-term fluctuations.
Stay calm. Don't overreact.
Got it.
Got it. What about herd behavior? How do we avoid getting swept up in that whole crowd mentality thing?
That one's tough because it plays on our fear of missing out.
Yeah.
You know, everyone's talking about this one hot stock or investment strategy,
Yeah.
and you feel like you got to get in on the action.
Right, that everyone's doing it, so I should too feeling.
Exactly. But what works for someone else might not be right for you. You got to stick to your own investment plan. Don't let the hype of the moment sway your decisions.
So know yourself, know your goals, and don't let those external pressures dictate your moves.
Exactly. And this is where having a trusted financial advisor can be so valuable. They can provide that objective perspective, help you stay grounded, make sure you're making decisions that align with your long-term financial well-being.
Great advice. So as we wrap up this deep dive, what are some key takeaways for our listeners?
First, remember that election years can be volatile, but historically, markets tend to recover over time. Don't let those short-term fluctuations derail your long-term goals.
Stay focused on the big picture.
Second, be aware of your own biases. How might they be affecting your financial decisions? Step back, look at things objectively. Don't let emotions drive your investment strategy.
Know yourself, stay rational.
Exactly. And finally, don't hesitate to reach out to a trusted financial advisor. They can provide personalized advice, help you navigate these uncertain times, and make sure you're on track to meet your financial goals.
Fantastic advice. And remember, you can find a link to that full InvestNet article navigating 2024 election year market volatility in our show notes. It's a great resource for anyone who wants to learn more about this topic.
It really is. It's full of insightful analysis and practical tips.
Well, folks, that brings us to the end of our deep dive. Thanks for joining us on this journey of knowledge and discovery.
It's been a pleasure.
Remember, stay curious, stay informed, and stay invested in your future.